We are live. Welcome back to the pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous, infamous PulseWave price trigger report that we put right in your hand each and every trading day from Sunday through Friday. That is how we do it. All right. All right. So we have a new day. Your boy, your home skillet, your home boy, your peoples, your peeps is supposed to be going live imminently. Your Fed chairman, Mr. Powell. And yes, he is now live and he is testifying, talking, whatever. He's live. He is on the air and he is moving markets. It is his fault that the markets are moving the way they're moving right now. This is all on you, boy. It's all on you. You did this, Mr. Powell. Ain't nobody else's fault but yarn. It's yarn fault. All right. Markets were a little bit positive before he opened his mouth. Let's take a look for yourself so you can see what's going on in these overnight markets. All right, so now you got your Dow futures down 49 points when it was just up a moment ago, like a second ago, it was up like 100 and something on its way to 200. Right now we're down 66 points at 23,515. NASDAQ 100 was up pretty decent too, and now it is only up 17 and a quarter points at 90.94. Even the S&P 500 is down 6 at 28.46 half. Russell down 14.1 at 1252.4. Bitcoin Futures Composite Index is up 305, trading at 9,175 after pulling back from the overnight high of 9,210. The nat gas is flat at $1.71. Crude oil's off a nickel, trading at $25.72. The long bond, the strong bond, is up 23.30 seconds, back above the 180 handle. We're now trading at 180 and 17.30 seconds. Gold is now up $16.10, trading at $17.22. I'm sorry, $1,722.90 an ounce. It was just a lot weaker than it is right now. We're now rallying, and now we're just a little bit off the highs of 1726.50. Let's see here. Silver's now catching a bid up 9 cents at $15.80. It did get as high as $15.91. So we'll see if it can keep on trucking. Taking a look at the US dollar index, it is back below par again. No surprise there. We're now down 19 pips at 99.73. The euro is up 20 pips at 108.81. Pound sterling is up 24 pips at 123.06. The Aussie is up 13 pips at 65.05. Canadian dollar is off 40 pips at 140.37. Euro yen is off 14 pips at 116.10. Dollar yen is off 33 pips at 106.80. And the Kiwi, the New Zealand dollar, is off 39 pips at 60.37. Switching over to food. We're now in the July contract for beans, wheat, and corn. Your beans are off a half at 8.51 half. Your corn is up 1.5 at 3.20 3/4, and your wheat is off 5. Wow, down 5 points at 5.09 half. All right, so you wanted the static. I gave it to you. I gave you all the smoke just now. That's the overnight smoke. FYI, for those that did not get the memo, I have updated all of the reports. The stops have been updated. I realized that I had an error on the stops last night. Didn't realize it until this morning, so I went ahead and I updated that for you. If anyone got stopped out prematurely, it's probably 100% chance because the stops needed to be adjusted. So I did that. All right, hopefully you didn't get stopped out prematurely. Hopefully you're able to get in there and bang it out. A lot of things did not trigger it regardless because the markets have been so consolidated. They haven't chosen a real direction to move just yet, but we got our eyes on it. Keep an eye out, though, for the E-mini S&P 500 this morning. Keep an eye out for that one. NASDAQ's been just whipsawing back and forth, and so has the Dow. Dow and NASDAQ have been literally all over the place. But I will say this, though. Taking a look at these markets, they're not really doing all that much. The one that's been the most volatile now that I'm looking at it here, it's really been the NASDAQ. The S&P, Russell, and Dow, they did not PulseWave positive. They did not. That is very interesting to see. They didn't do it. No ma'am, no sir. Interesting. Let me just check something else. I gotta check that. Oh, that's right. I'm looking at my my loaded sheet. Going by the loaded sheet, yeah, you got no long rhythm last night. You did not get triggered long in the Dow. You did not get triggered long on the S&P, and you did not get triggered long on the NASDAQ. Well, the NASDAQ, no, you didn't. You would not have if you were using the regular buy trigger and not the loaded trigger. You see that has not happened. Let me explain something real quick to you on that one. Okay, so if you're using a loaded sheet, the PP was what I labeled it, the pickpocket. That one is that aggressive entry that captures any kind of rhythm in the market whatsoever. That's for when you're going to be sitting there and quick on your feet and playing both sides of the market. The buy trigger, though, is a very special entry point because it's actually technically more conservative, but it's also that fire. So if you only enter based off of it, you will catch a lot of smoke when the market's moving. When the market's not moving, you're not even thinking about it. You're not even worried about it because you're not in it. It's the way that I did it. The other thing is, too, on the loaded sheet, there's always a price trigger. There's not a situation where there's not a trigger. There's a trigger on every single joint. So you're always going to have orders working in the market or be long or short the market for the most part on the loaded reports. Just FYI, that's just how I kind of designed it to be like that. All right, so let's see what else we got. Give me just a second to get acclimated. Need to get acclimated. All right. So the way I'm looking at it now, just watch out for, like I said, watch out for the Dow, watch out for the S&P this morning, and watch out for all the stock indexes on the long side. If you're looking at that, if you're looking at the loaded report, there's something very interesting about that this morning. Just want to throw that out there at you, okay? Something to be said about all of those. Even though the market has been mad volatile, it still has not triggered any real buying interest. There's no long bias in the market right now. This is just so interesting to see this live like this. Excuse me. Okay, as far as Bitcoin, Frank, Hold on, let me come out of this page I'm in. All right, on your Bitcoin, I'm looking at my loaded. Yeah, on the Bitcoin, you definitely got some rhythm. According to the loaded report on the Bitcoin, if you took that trade on the Bitcoin, yeah, you definitely got some smoke. You definitely got some smoke on that one, but not on the downside. You got it on the long side. If you were using the loaded futures composite index to get long the coin, yeah, you up. You caught the whole entire move for the most part. You'd be up 165 probably. Yeah, yeah. On the regular, yeah, the intraday price inflection point on the regular report, yeah, that's not nowhere near it. Yeah. You know what I can do? It depends on how y'all. I mean, it depends on the voice of the people, of course. It was whatever y'all want. If y'all want to, I could do a little something special for you. I can give you I can do an augmented reports tonight. I can augment. Like what I'll do instead of making them loaded per se, I will just give you the um the augmented, meaning the conservative entry point off of the loaded spectrum. What that means is instead of you having a blank space, a zero space when there's no money flow bias, every buy trigger and sell trigger will be populated. That's all. That's all I mean by that. That way you'll see what I'm talking about. All right. So yeah, I could do that. I mean, that's easy. The only thing that's going to change is there won't be any zeros on the report. You won't, if there's a bias or not, it will just auto populate on the buy and sell trigger. But it won't be a loaded trigger. It will be it'll be the conservative augmented trigger. One thing about the loaded report is that you have a loaded trigger that's smoking hot, but the regular buy and sell trigger differs from the regular reports buy and sell trigger because it's an augmented trigger, meaning that it's both loaded and trend following. It's loaded when it needs to be, and it trend follows when it needs to be. It turns itself on and off. The loaded pickpocket never turns off. It's loaded all the time. But the augmented daily and triggers and whatnot, those are those you get a trigger every day regardless of money flow. It's going to give you an intraday price inflection point. What it'll do is if there's not a money flow for that particular market for that particular night or day, whatever, what it'll do is it will become predictive and it will show you and it will produce one regardless. Put it that way. They'll look at price ladders and all this other stuff, and it will be foretelling and say, okay, do this one. So you'll still have situations where you won't be triggered long or short in the market, but you won't have a blank there either. So I think a good example would be from yesterday's euro. All right, I think that's the classic example. Yesterday's euro. So yesterday's euro, you would have excuse me. On yesterday's euro, it was possible. Yeah, some people got triggered on the euro, and what this would have done is it would have made it so that the short, even if the short would have never triggered according to the loaded report, but the long would have triggered, and what would have happened is you would have ended up with a little bit of coinage on that long trigger, but you would never been short on the short trigger. And then you look forward to where the market is today, and you would have seen that um, you would have maintained whatever you picked up in yesterday's market because in the overnight the euro that has transferred over into today's market. All right, no real breakout. There's no real projection from yesterday's move, technical bounce, but the market has locked that move in. So you would have been safe and you would have been able to hold that. So that's something to consider. It's up to you how you want to play that. If y'all want me to show you what I'm talking about, I can put it. I can just switch that around tonight so you can see it for yourself, and then take it from there. Because it's two different reports. As it stands right now at this moment, loaded report is a whole different report from the standard report, because of the mechanisms used to generate it. So I can take the conservative buy trigger from the loaded sheet and use that on tonight's regular sheets. And then you can kind of see the difference of what I'm talking about. And what it is what you'll see is it's pretty much, by all intents and purposes, it's the same trigger. It's just that you won't have any blank spaces now. Where in the with the normal ones you do. Because what it does is it's like training wheels in a sense. I'm trying to make it so that it will keep you out of trades that aren't manifesting, if that's a better way to say it. And it'll keep you on the right side of the market. So that's basically what it's designed to do. It's just doing its job, in other words. Let me just look at one other thing here. Just bear with me. I just need to check something real quick, and then we can move on. All right, just verifying some data. All right. Okay. Yep, it is. It's just like I thought. It uses a whole different data set. Yep. Using a whole different data set. I see that now. All right, so let me see. What I'll do, that way it's not confusing. I have an idea. I do have an idea. I'm going to give you an augment of an augment of an augment. So tonight, just for tonight only, you'll see what I'm talking about. You will get the normal report. It's just that it won't be the blank space for the buy and sell trigger. That's all. It'll be auto-populated. And again, the only reason why I was doing that is because I didn't want to confuse a lot of people. So this was my way of keeping you safe. All right. Yeah, it cost you a little bit of liberty, but hey, we're keeping you safe. All right. Yeah, you need permission to go to the bathroom or permission to go from one room of your house to the other. Papers, please. But at least we're keeping you safe. So it's up to you guys. I'll let y'all tell me what y'all want. If y'all want to see it, then you can see it. That way you can understand it better what I'm talking about. So it will augment all of that, and then we'll see. But you know what? Now I don't see when you talk things out like we're doing right now, sometimes the juices get flowing, and then you can come up with a better alternative. I think what I could do. Hold on one second. Wait a minute. Let's go back. Go back one day. Hold on one second. All right. So what I could do, that way you don't miss opportunities. Okay, I think I got it. I think I know what I'm going to do. I think this will help you all a little bit better. I think it will. So this is what we're going to do. I think I have a better way to do this. I think I have a better way. I have a better way. Yes, I do. Yes, I do. All right. Yep, I got a better way. I got you. I got you. You ain't got to go nowhere. I got you. I got you. Just relax. I got you. See, what we're trying to do here at PulseWave Trading, we are shaping the world. We are changing the world, one trade at a time. Our goal is to get as many people to profitability and prosperity as possible. As possible. That is our thing. The more people we can help to achieve financial independence, that's one more person getting snatched out of the bottom 90% and thrown up into the 10%. That's my goal, is to take as many people out of that 90% and throw you into the 10%. That's the goal. That's the goal. Think about it. Do you know how it would upset the status quo? Do you know how it would upset? So they think they doing something. They done took all your jobs away, telling you you can't prosper, telling you you can't make no money, telling you you ain't gonna make no money. You can't make no money. This our markets. We do what we want to do. You ain't gotta listen to that no more. You don't. You ain't gotta listen to that no more. You can ignore all of that. You can ignore all of that. So I think I got you. I think I know what needs to be done, and we just gonna do it. We're gonna make it do what it do, player. I think we got this. This is very ingenious, and I'm wondering why I didn't think about it sooner. What is wrong with me? What is wrong with me? Why didn't I think about this before? Seriously, we could have been does this, you know? So yeah, I think I got it now. Talking to you guys really helped the brother out. I think I see what we need to do up in here, and ain't nothing left to do but to do it. I'm a multitasker. I can talk, carry on a conversation with you guys, and be up in the lab at the same time. Only we're live on the air, so you notice all of my ramblings that don't make any sense right now. And it won't make sense until you see what I've done, until you see what I am doing. I'm doing this all for you, okay? I'm doing it for you. I'm doing it because I care about you, okay? So here we go. I got it. I think I got it. We're gonna see how things flow tonight, and I think we'll be able to make some real headway here and do some real damage to the enemy's camp, because that's what this is about. Oh, and by the way, on those forex trades, thank you. Keep the feedback coming, um, because that's going to be very helpful as we move forward. I knew what I had to do, and I realized that after I'd done it, I had to adjust those stops. One thing about using the bank's the interbank broker FX system, they're all the same. They're all the same. But there's one thing that's just unique. There's a little twist on O&As. And I think I finally got that now. I think I got it. It was on one of the pairs. I can't remember which one it was, but on one of the pairs, dude, it was looking crazy up in there. For real. It was like I think it came within 1 point, 1 tick, one number of being my number exactly on the reports. Y'all know what I'm talking about? Yeah. So, um, yeah, man. Oh yeah, I know, right? I know, right? Yeah, man. Hey, you know, to quote, what movie was it? Because I always do it with my wife and I, my oldest child. We always use movie quotes. Um, what was it? I think it was the Ike and Tina Turner movie. I think it was that one where he was like, "If I did it's because I love you, right?" Yeah. Except for I'm not causing you any harm, trying to hook you up. All right, so we have the opening bell now, so all that's done. All right, so I've talked about it. I know I know what I'm gonna do now. Don't even fret. I got your back. You don't have to go anywhere. I got you. All right, I got you. I want to point something out though. Okay. So on the reports, okay, on the reports, all you have to do, and I didn't think of this to tell you until now, but I'm looking at things and like, how could I make this plain and simple for you to see? Okay, I think what I need to do is I'm gonna point something out to you real quick. Okay. I've already done what I was trying to do and didn't realize I'd already done it. Okay, if you look at your on under the momentum column, um where you have the 777s, your 311, and your 911. Sometimes you'll get a 401, sometimes you get an 11 too, but for the most part, your main numbers is 777, 311, and 911. Okay, whenever you see a 911 on the reports, that is your key money flow bias. Okay, so for example, coming into a day, if the money flow bias is negative, meaning we're expecting more selling, but the market decides to turn intraday on that day, well, what happened now is when you go into the trade, you'll say, I'm going to go ahead and trade with the trend. Since we got negative money flow, I'm gonna go ahead. I'm gonna sell short. However, I'm gonna be prepared though to get out of the market. I'm preparing myself to get out and stop and reverse if the situation calls for it. Because sometimes your stop and reverse is not equal to the entry trigger. And if it's not, then you're not stopping and reversing. You're just stopping and sidelining until that long gets triggered or vice versa. So yeah, I don't think I stressed that enough with you guys. The 911s is your key money flow, letting you know where the bias is in the market on any given day. All right. And that does project forward 24 hours as well. So when we get a true turning point, what happens is the intraday price triggers will pick that up before the end of day report comes out. So let's say we were short the Dow last night, right, in the futures, but something happened and there was a huge reversal. Before the end of day report comes out, your price trigger will catch that and trigger you now on the other side of the market. So that's how that works. And then based on how the market closes and based on where the orders are by the time the market closes and the next report comes out, it will let you know if there's a shift or if it's not, if that was just a 1 day thing. So it's a lot of work that goes into the reports is basically what I'm trying to tell you. A lot, a lot. Yeah, there's just a lot of volatility right now. The markets are just frolicking around, but we have no real rally. There's been no breakout. I don't care how high you saw any of the overnight markets. There is no true. There is no momentum shift. There, it's not. It was just technical bouncing, and now we're back down. If you can see my screen, you see the Dow is now down 145. We're testing the overnight lows now to see if those are going to be overnight lows or if they're going to get violated and we haven't seen the lows yet. Very interesting day. And your gold just pulled back. It's giving back half of its gains that it just broke out with. So that's a lot going on right now. A lot going on right now. Okay, let's get into the overnight news because it's very important that we do that. You got to know what's going on. You already know some of it because your boy Powell is speaking right before our eyes. So that's already happening. All right, here we go. Give me just a second. Gotta move something around. Okay, here we go. All right, so the UK economy shrank 5.8% in March, the fastest drop in history, and it's only going to get worse. The UK's economy shrank at the fastest pace since the global financial crisis in the first quarter of 2020, according to data released Wednesday by the country's statistics authority. Time to reinvent yourself. Warren Buffett won't find bargains with the Fed shoring up prices, investors say. Warren Buffett needs to shift his investing strategy because hunting for bargains isn't working, investor David Merkel argued on the Aleph blog this week. So now other people are telling Warren Buffett what he needs to do. That's funny. That is funny. 1 minute he's the sage, he's the prophet, he's Yoda, he's Han Solo, Obi-Wan Kenobi. Now you talking down to him like he's your son. Good grief. Trump's blame game with China on the origins of COVID-19 could spark a major currency war, analysts warn. Escalating tensions between U.S. and China on who is responsible for the outbreak of COVID-19 will not just push the Chinese yuan lower, but could also spark a major devaluation across numerous major currencies, analysts warn. Okay, so analysts are warning that this little, pissing match between, the U.S. and China could end with unintended consequences, such as the, what's the word I'm looking for here? The distribution of their currency. All right. Qatar Airways is in talks to defer Airbus Boeing orders. Qatar Airways, one of the Middle East's biggest airlines, is in talks with Airbus and Boeing to defer aircraft orders for several years, its chief executive was quoted as saying on Wednesday. See, it's like people don't understand the U.S. foreign policy and how autistic the U.S. government's foreign policy is. And yes, I can use that word because I have autistic children, plural, not singular. The bottom line is they think that they're hurting, China and other countries, Middle East especially, and not thinking that, hey, they own all of our debt. They literally own all of our debt. China owns half of the U.S., literally. So why would you go and spit in the eye of your banker whom you owe money to? Okay? You owe Guido a stack. And then you're going to go and talk smack behind Guido's back? You're going to put his name in the streets like that? Say he a punk. He ain't going to do nothing. Yeah, you owe him money, but you ain't paying him nothing. You know that Guido is the city gangster. You know he's a loan shark. That's how he eat. That's how he get his money. You know about his reputation for breaking arms, legs, and kneecaps. All right? And you saying he ain't going to do nothing. He a punk. I ain't paying him nothing. China, I ain't paying you nothing. You gave us the coronavirus. I ain't paying you nothing. Now, I'm sure the American people realize that they only did this so that they could blame China. They false flagged China because China holds, all of our debt. And because we don't have the money to pay them and don't want to pay them, even if we had the money to pay them. So we'll just false flag them. We'll go ahead and drop that coronavirus in their country and say, see, look, it came from your country, even though you're the one that planted it there. But not realizing that the unintended consequence effect will be China saying, you know what? Forget you. We're going to cut our own nose off to spite our face. So here we go. We're going to dump all of our bonds. We're going to destroy your bond market. Yeah, we hold like $1 trillion worth of your bonds, but so what? We can lose it. We'll take the loss just to punish you. Yeah. Oh, and by the way, we're pulling out of your real estate market. We're selling every piece of real estate in your country that we own just to teach you another lesson. Yeah, we'll take a bath, but you'll take a bigger bath. We may take a bath, but you're going to drown. So yeah, let's go ahead and dump all of our real estate on the market. Let's sell that $1 million house right there in that high-end neighborhood. We'll sell it for $50,000. We'll take a bath, but you're going to get decapitated. Because now what are you going to do when we sell that house for $50,000 on the market? Everybody in your neighborhood now is going to get decapitated, financially speaking. $1 million house selling for $50,000. Yeah, that's going to hurt all of y'all now. And by the way, we own half of the houses in the development. So we're going to hurt more of you by selling half of the houses that we own in there and bring down your property values all over the country. So we're going to decimate your bond market. We're going to tear up your real estate market. This is all what we're going to do. We're going to teach you a lesson for blaming us for that coronavirus. You lined us up, America. You lined us up. So we can't allow this to go on. Then you're going to talk smack about them in the street like they ain't going to do nothing. And then when Guido catches you in the street, now it's all, oh, I was just playing, man. You know, I was just playing, man. Now, come on, man. You know, I was just playing, man. You know, he ain't trying to hear none of that. He has to send a message now. He has to send a message because if he don't, then the other gangsters in the city not going to respect him. And people that owe him money, they're not gonna pay him or respect him because they'll think, well, it's okay that you don't pay him because so and so didn't, and he talks smack about him. So the first thing he'll do when he see you, he's gonna smack you. He's gonna smack the taste out your mouth. He's gonna do that first. A pimp smack. Pow! You're gonna hear that smack from across the street. You know, rest in peace, my man Sean Price. How you say? He said, "I'll smack Earth, Wind, and Fire." Out of dudes. He said he smacked people so hard you could hear it across the street. He said he once got expelled from school from smacking somebody so hard. Oh man, long live Sean Price, man. He was one of the greatest MCs of all time. So anyway, you know what's gonna happen when Guido see you in the street. And then he's gonna have to break something because he has to send a message. The smack was just to get your attention, but now he gotta break something. So he's gonna go for them kneecaps. Because then you can't run from them. So he's gonna go for them kneecaps. And that's what's gonna happen. So China is coming for our kneecaps. And there's no way the US can win a trade war against them. Now, yeah, I know what you're thinking. I know what you're gonna say. I can already hear it. Yeah, but Dex, you're forgetting they have 100 gazillion people in their country, and they can't eat. They can't produce no food, not enough to feed everybody. So they need our soybeans and our corn and stuff. They need us. Nope, they don't need nothing. They can get their vegetables from somewhere else. The U.S. is not the only exporter of vegetables. Okay, so no. Again, check, and checkmate. Dow is in free fall, down 300. Yeah, but the futures is only off 121, which means that any pullback you're seeing right now is not real. I think we're having a sort of inside day, not like Monday or Tuesday per se. We technically had a sort of continuation pattern. I think we're just trading in the range. The range was set for us, and now we're just moving inside and in and outside of it. Because right now your futures are not agreeing. I think your equity, your cash index is just catching up with what happened in the overnight market. Dow futures is only off 97, but your NASDAQ is now positive. And your S&P is only down 7 points, and your Russell's only off 8 points. That's nothing. The price swings we've seen, this is nothing. So nah. Nope. I think the market is just trying to hurt as many people as it can. You know? All right. Let's see. Futures rise ahead of the Fed Chair Powell's address. U.S. stock index futures edged higher on Wednesday, a day after Wall Street's main indexes fell as investors kept an eye out for Federal Reserve Chairman Jerome Powell's address. So people are listening to that. That's what's going on as we speak. All right, they are live on the air. Emirates plans schedule flights from May 21st to 9 cities. Emirates Airlines from May 21st plans to operate scheduled flight services from Dubai to London Heathrow, Frankfurt, Paris, Milan, Madrid, Chicago, Toronto, Sydney, and Melbourne. It said in a statement on Wednesday. Fed Powell to assess next phase of pandemic economy. Federal Reserve Chair Jerome Powell, having overseen the rapid creation of the central bank's massive network of pandemic-era programs, turns his attention Wednesday morning to where things stand on the cusp of what may be a risky reopening occurring disparately across the 50 U.S. states. And as you already know, stocks are mixed all over the place. First quarter earnings coming in for Sony and Cisco. Those are the two highlights. Economic data is U.S. EIA crude oil stocks change. And of course, the Fed chairman who is speaking as we are speaking. All right, so that's your little plethora of news. But we need to go in there since the chairman is addressing the public. It's only fair that we let's segue into that side of the market. You're not the end all. Rand Paul slams Fauci in a heated exchange over lockdowns. I don't know if you guys saw that or not, but for those who did not, Senator Rand Paul, who's a Republican of Kentucky, gave quite the earful to a homebound Dr. Anthony Fauci on Tuesday over the COVID-19 lockdown that has crippled the U.S. economy. Paul, a medical doctor, noted during the Senate hearing before the Senate Health, Education, Labor, and Pension Committee that the mortality rate among children approaches zero, and that those for aged 18 to 45, the mortality in New York was 10 out of 100,000. The history of this, when we look back, will be wrong prediction after wrong prediction after wrong prediction. As much as I respect you, Dr. Fauci, I don't think you're the end all. I don't think you're the one person that gets to make that decision, said Paul, who added that we need to observe with an open eye what happened in Sweden, where the kids kept going to school. The mortality per capita in Sweden is actually less than France, less than Italy, less than Spain, less than Belgium, less than the Netherlands, about the same as Switzerland. But basically, I don't think there's anybody arguing that what happened in Sweden is an unacceptable result. I think people are intrigued by it, and we should be. I don't think any of us are certain when we do all these modelings. There have been more people wrong with modeling than right. We're opening up a lot of economies around the US, and I hope that people who are predicting doom and gloom are saying, oh, we can't do this. There's going to be a surge. We'll admit when there isn't a surge. So, ouch. Ouch. The history of this, when we look back, will be wrong prediction after wrong prediction after wrong prediction. As much as I respect you, Dr. Fauci, I don't think you're the end all. I don't think you're the one person that gets to make a decision. Wow, talking about a scathing rebuke. Fauci responded 25 seconds, saying, Senator Paul, I have never made myself out to be the end all and only voice of this. I'm a scientist, a physician, and a public health official. You've also forgot liar. He forgot the word liar. All right. He then he then offered a but the children argument, latching onto Paul's comment that we don't know anything about the virus and that that we really better be very careful, particularly when it comes to children. Because the more and more we learn, we're seeing things about what this virus can do that we didn't see from the studies in China. He still didn't answer the question. You're not addressing what about the children over there overseas? What about the Nords? What about what's going on? He's not addressing it. Because the more and more we learn, we're seeing things about what this virus can do that we didn't see from the studies in China or in Europe. For example, right now, children presenting with COVID-19 who actually have a very strange inflammatory syndrome, very similar to Kawasaki syndrome. I think we better be careful that we are not cavalier in thinking that children are not immune to the effects. And the bottom line is he still is not talking about what is happening in Sweden. My dude, what is wrong with him? Good grief. All right. So where do we go from here, you guys? I mean, there are so many documentaries out there that have exposed your boy Fossey. I don't even know where to begin. I don't even know why he is in the position that he is in, other than he is part of that world. Billionaire VC warns Fed stimulus risk triggering deflationary super cycle that could crush Main Street. Appearing for the third time in 6 weeks, social capital founder and former Facebook executive Champ is at Chamath Pilalapatia. We'll just call him CP. CP joined the host of CNBC's Squawk Box for an interview Tuesday morning, where he warned that the Fed's coronavirus response will create serious long-term problems for the American economy. CP has participated in a series of widely discussed interviews on CNBC in recent weeks. CP started the interview by going all in on the Fed and the White House's response to the economic crisis caused by the coronavirus, skewering programs like Triple P for funneling money to companies that didn't really need it, and once again bashing the Fed for once again pumping up asset prices while placing Main Street at imminent risk. There should be no doubt now that we've completely divorced the economy from stock and bond markets, PC warned. The end result of this trend, he added, will be a deflationary supercycle as the Fed's abuses come back to haunt the American economy and the dollar. All this money going in to prop up companies. What are you going to, he says, what you are going to start or accelerate is a really bad deflationary supercycle. There should be no doubt now that we have completely divorced the economy from the stock and bond markets. All this money going into prop up companies, and he has a good point there. With the Fed's balance sheet well on its way to 12 trillion by year's end, and levels that were deemed to be unfathomable just months ago, CP reiterated that the rebound in equity markets has done almost nothing to put food on people's plates or yeah, and it definitely ain't done nothing for no small business owners. Asset inflation does not solve income disparity. It actually doesn't solve full employment. It doesn't do any of the things we need it to do for it to be a robust economy. What it does is allow people who play in the financial markets to make money. You don't say. What's wrong with that, huh? What's wrong with that? Exactly how might this deflationary spiral happen? The former Facebook executive explains that by doling out money to massive corporations that have spent the last 10 years borrowing money to buy back stock, while paying workers more money in unemployment benefits than they earned in wages, creates a perverse system of incentives that, once the crisis has ended, could create the same economic dynamic that played out in Japan during the 1990s. With the flood of cheap money, the financial shell-shocked consumers will save more, preventing the consumer-driven economy from generating the roaring growth needed to compensate for the crisis. While leaving the U.S. in a kind of limbo as growth slows, prices fall, savings rise despite rates remaining extraordinarily low or negative, and productivity lapses while employment never really recovers. The best example of this, of course, Japan. We note that Zero Hedge has been warning about the Japanification of the U.S. economy and monetary policy for some time. If you don't break this cycle and teach a new pattern of behavior, we're going to be looking at a Japanese style deflationary period. Moving on, CP also joined Donald Trump in expressing sympathy for Elon Musk in his battle with California, a campaign that has turned public opinion decidedly against Tesla. CP, who has long praised Tesla to the consternation of the TSLAQ community, urged Alameda County to sit down with Musk and Tesla and work out a mutually acceptable compromise. Notice how they separated. It said Musk and Tesla, like Tesla is a human being. You can't sit down with Tesla because Tesla is a company. You can sit down with the head of the company, but you can't sit down with a Tesla. I mean, you could go out there and buy a Tesla and then talk to it, but I'm sure it wouldn't talk back to you. Finally, CP joined PT in praising Bitcoin, talking about Tudor Jones, and praising Bitcoin, arguing that the pioneering cryptocurrency is the only legitimate asset that has decoupled from the rest of the market, and that by its very nature, the declining trust in the traditional financial system could be a huge boon for Bitcoin. Now, all of a sudden, even Tudor Jones is looking at Bitcoin. And the reason is because we are in this massive deflationary spiral, CP says. I still struggle to find anything that is as uncorrelated to anything else and to everything else than Bitcoin. Indeed, the inherently deflationary Bitcoin will perform even better in real terms as the value of the US dollar weakens, one of several important market dynamics explored in greater depth by Tudor Jones, one of the most successful traders of his generation. That is a fact. Mr. Tudor Jones is definitely one of the best traders of all time. He will go down in history for doing that. Him and Richard Dennis and Richard Dennis's Turtles. Yeah, they're going to go down in history for sure. Definitely one of the best. Like I said, he was the one that pimped the 87 crash, and he did it in real time. It was an interview that he did talking about what was coming based on what he was seeing. And then, of course, when he said it, everybody thought that he was some kind of lunatic. And then when it happened and he made all that money, everybody was looking like, how did you know that? That's impossible for anyone to be able to predict the future like that and predict the markets like that. Who can do that? That's impossible. Market timing doesn't exist. 90% of traders lose. 90% of retail traders lose, Tudor Jones. That includes you, you know. Whatever. Save it. The man proved to you that it could be done. Even I told you, there's more than one way to get your money out of these markets. All right? And the people who are in the know, they hold it close to their vest, close to their chest. You will never get it out of them. And rightfully so. Would you sell the goose that lays the golden eggs? No, you wouldn't. Unless you're an idiot. All right. So let's go over to Mr. Jones now. An unprecedented expansion of every form of money, unlike anything ever seen, while Tudor Jones is bracing for hyperinflation. Are you guys ready? Do you got your big boy and big girl pants on? Are you ready to get long the report? All right, here we go. Paul Tudor Jones. All right, on Thursday, Paul Tudor Jones revealed he had placed a substantial bet on Bitcoin, arguing that the pioneering cryptocurrency was also the vehicle best suited to outperform during the coming decade. He didn't say this week, this month, this year. He said the coming decade. He argued will closely resemble the 1970s due to a mix of high inflation and low growth, popularly known as stagflation. Stagflation, hyperinflation, stagflation for the whole entire nation. You won't even afford to take your family on vacation. Of course, Bitcoin is deflationary by design, making it a de facto hedge against inflation. And with the halving coming up next week, the supply of new Bitcoiners entering the market is about to shrink dramatically as the supply of freshly printed fiat explodes. PTJ, Paul Tudor Jones, has been warning readers about the dangers of America's crazy monetary fiscal mix since at least January, which he told at CNBC the situation in contemporary markets reminded him of 1999. Of course, since that interview was filmed, the Fed's balance sheet and the balance sheets of myriad other central banks has exploded. Papoom. Of course, let's see here. While a spate of developed world governments and central banks, via a heady brew of fiscal and monetary policy, scramble to inject as much capital into the real economy as quickly as possible, in a great monetary experiment that, as PTJ argues in their paper below, is putting modern monetary theory into practice. Wow. I said, wow. Mm-mm-mm. Well, I must say, ladies and gentlemen, everyone bought it on themselves when they keep voting crooked, corrupt individuals time after time after time. There should be no such thing as a career politician, but in this country, oh yeah, we got career politicians. What nonsense. News of PTJ's Bitcoin play helped trigger a sharp rally in Bitcoin on Thursday. BTC has traded mostly sideways since. In his report, he offers a detailed overview of his investment strategy and explains why somebody who isn't a believer in the cause of Bitcoin can still come up with a valuation framework which suggests that Bitcoin's value will be recognized by a growing number of people around the world as trust in central banks inevitably continues to erode. All right, pause for a second. Remember what I told you guys. I don't care who you are, but everyone talks their book. Make no mistake, Mr. Jones has a substantial position in Bitcoin. He's talking his book. Now, because a famous person is in the space, more people are going to follow in there, even if they don't like it or don't know understand anything about it. They're going to get long the Bitcoin because Paul Tudor Jones is long the Bitcoin. All right, he is one of the most famous unknown people on the planet. In the trading world, he is a legend. In the investment world, he is a legend. On Wall Street, he is a legend. Triple OG status. All right, because he doesn't just talk about economics, he trades the markets. He's a real trader, not a fake trader, but a real trader. When I was in high school, he was pimping the S&P 500 during the 1987 market crash. I was so jealous. Why couldn't I be just a little older to take advantage of that? But that's all right. I had my time. Ha 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 ha. But yeah, so this is definitely something to listen to. If he's saying it, it's real. Yes, he is also a billionaire. And yes, Warren Buffett has nothing on this man. Warren Buffett does not compare to this man in any way, shape, or form. He cannot even tie this man's shoes when it comes to the markets. Straight up, he will trade him under the table any day of the week. The only person that may be able to give him a run for his money from a trading perspective will probably be George Soros. That's about it. It's funny because when you hear the name George Soros, you just think, wickedness like you do when you hear the name Bill Gates. But you can't take nothing away from the man's trading prowess either. And don't forget, him and Jim Rogers started out together on Wall Street. So don't forget that. Even though Mr. Rogers is a very humble man, tells you can't time the market, do not get it twisted. I said him and George Soros started together. Obviously, the man knows how to trade. Just keep that under your hat, too. So that's about it. As far as trading legends, not people who just took advantage of anomalies in the market, but they're still operating today. They're still in the markets today. No. See, you're referring to the thing he did with the British pound. That was something totally different. That he was getting his Warren Buffett on. That was a Warren Buffett move. That was not a trading move. That was a Warren Buffett move. Big difference. That's what Buffett does. He does stuff like that. He's able to do things the normal person cannot ever be able to do. So yeah, he did that. But before he did that, he was in those markets. See what I'm saying? So you gotta remember they started off in the 60s, man. They started doing their thing in the 60s. Before a lot of us were even walking the earth. They was pimping markets. So yeah, he got his little Soros. He got his little Warren Buffett on. Don't make no mistake about it. That's how Buffett makes his money. I'm trying to tell you that. I'm trying to drop some real science on you right now. That's what Buffett's able to do. He does not trade like George Soros or Jim Rogers or Paul Tudor Jones. No way, no how. He doesn't even know how. He can't. Read any of his writings. The man doesn't have a computer on his desk. How does a trader not have a computer in their office? Are you kidding me? Traders have trading devices all over the house. What are you talking about? Real traders, they're going to keep him in tap with that market. But your man, Buffett don't care about the market. He makes money regardless. He can go and just do a deal. Matter of fact, he should have wrote the book, The Art of the Deal. Not Donald Trump. Seriously. That's his thing. He knows how to do deals. He knows how to buy and sell companies and stuff like that. That's what he does. But if you set him down in front of a computer screen and said, okay, here's a Thinkorswim trading app. Show me what you got. He'd be like, I don't even know what this is. What am I looking at? He said, that's not how I do things. Give me a phone and I'll show you what I do. See what I'm saying? Totally different approach. All right, let's get back to it. So COVID-19 is a one-of-a-kind virus that has triggered a one-of-a-kind policy response globally. I would like to rewrite that and say COVID-19 is a one-of-a-kind pandemic that has triggered a one-of-a-kind policy response globally. That's a better way to say it. If you haven't seen Plandemic yet, I don't know what you're waiting for. Hurry up and watch it before it is gone. The depth of magnitude of this economic drop-off took modern monetary theory, or the direct monetization of massive fiscal spending, from the theoretical to practice without any debate. It has happened globally with such speed that even a market veteran like myself was left speechless. This is Mr. Jones writing. Just since February, a global total of $3.9 trillion, or 6.6%, of global GDP has been magically created through quantitative easing. We are witnessing the great monetary inflation, an unprecedented expanse of every form of money, unlike anything the developed world has ever seen. Now, you haven't seen, you guys haven't heard anyone other than me talk about or demonstrate how all the markets are correlated almost 100%. I've shown you chart after chart, day after day, showing you the trading patterns of assets that are not supposed to be correlated. They're supposed to be negatively correlated. I've showed you how crypto charts look like an S&P 500 chart. I've showed you how bond charts look like a Dow chart. I've showed you how forex charts look like a Bitcoin chart. I've showed you how the US dollar and Bitcoin were pretty much tied at the hip. Remember those videos I got a lot of hate for? So I've been showing you the breakdown of correlations in markets for years. All right. People really aren't talking about it, but notice it took a fellow trader to bring that up. You never heard that on CNBC. You never heard that on Bloomberg. You ain't heard that nowhere. You haven't heard no one other than myself show you how the markets have become correlated, which is technically impossible. Just think about it. I don't have a lot of time to go into it, but just think about it with your logical self. If we have assets that supposedly have nothing to do with each other, gold and silver should not be moving in the same direction as the Dow. The US dollar should not be moving in the same direction as Bitcoin. You see where I'm going with this? A lot of markets were designed on purpose to be negatively correlated with others. That's why for decades, what did you hear preached? Diversification, 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 diversification. That's all you heard talking about, diversification. Utilities stocks are good for this and that. Some tech stocks you want to have in your portfolio for this and that. You want to have some blue chips if you for income, because they usually got nice consistent dividends. You heard these things preached. Oh, you want to get into a good bond fund or buy some bonds, during times of market decline to protect, yourself. You've heard this diversification, diversification, diversification on purpose, because bonds are supposed to move inversely to stocks. Gold and silver should be moving inversely to the dollar. When the dollar is down, they should really be up. And when the dollar is up, they should be up. See what I'm saying? But no. All of the ingenuity of man has broken down. Why has it broken down? Because now the markets globally have been connected like a Lego block. So now you got Lego block connections. So when a computer pushes the buy button on one thing, it signals all the other computers that, okay, number one computer just bought Microsoft. We got to buy Microsoft, and we got to buy everything around it. So that's what you're seeing. You're seeing markets move the same way, tick for tack. That is not supposed to ever happen, because the markets are supposed to be made up of human beings. All right. One person has an agenda, another person has another agenda. So just because Microsoft went up doesn't mean ABC company stock is going to go up, even though they're both traded on the NASDAQ. See what I'm saying? Because the reasons that people were buying ABC company is not the same reasons why people were buying Microsoft. Two different companies. One is a computer company. Let's say the other one is an internet company. All right. They're not necessarily going to have the same valuations or the same types of earnings. What if ABC's earnings have been whacked? Should the stock be rewarded and go up because Microsoft stock went up? That's not going to happen. It's not going to happen. But that is what's happening. I've showed you charts where tick for tick, they've moved all in the same direction, like they're taking marching orders from something. So that should tell you. Now, we got an innumerous number of funds, mutual funds, hedge funds worldwide. And I'm not just talking about the United States. We got funds all over the world. All right. How is it that they're all buying and moving the same thing at the same time, unless they're all using the same platforms and interfaces, including the high frequency traders? Uh-huh. What is that telling you? It's telling you that everything is controlled now by a machine. Whether you want to label that artificial intelligence or whatever, the markets have been connected now by robots. Monkey see, monkey do robots. That's why all of the charts look the same and move the same. That is not supposed to be possible. You're trying to tell me that everyone in the world agrees at the same time? Every investor, every retail trader, every institution, every mutual fund, every hedge fund, everybody agrees in unison at the same time? So if the Dow is down 1,000 points, every stock is going to be down the same. Every chart is going to look identical. So when you sell one company, you sell them all? Really? People who don't even know each other, who don't even talk to each other, don't even know the person exists on the other side of the world, we're all buying and selling the same securities at the same time, at the same price? Really? So you're saying we already have the Borg hive mind and we just don't realize it? Because every time somebody in Texas buys a share of Microsoft, somebody in Toronto is also buying a share of Microsoft at the same exact moment, at the same exact price? Really? Really? I don't think so. People need to open their eyes. All right, you got to open your eyes. Global debt was very elevated entering the pandemic, and this monetary expansion is funding additional large debt creation for now without provoking the disciplining response of rising market yields. So far, the result has been asset price reflation. A large demand shortfall will prevent goods and services inflation from rising in the short term. The question is whether that will be the case in the long term, with a central bank whose central focus will be repairing the worst employment crisis since the Great Depression. One thing is for sure: there will be many assets that will move as a result of this money creation. So, what is an investor to do? Traditional hedges like gold have done well, and we expect investors to continue to seek refuge in this safe asset. One thing I have learned over time is the best thing to do is let market price action guide your decision making, and then try to understand the fundamentals as they become more evident and comprehensible. Quite often, how the markets respond will be at odds with your priors. But remember, the P&L always wins in the long run. With that in mind, in a world that craves new safe assets, there may be a growing role for Bitcoin. Talking about debt addiction. What is apparent to all is the global ramp up in debt from every sector to deal with the economic downturn. In addition, the debt ratio is increasing by virtue of a larger numerator. Such ratios will also be buoyed by a falling denominator. It may take more than 2 years to bring nominal GDP back to its pre-shock level. The Congressional Budget Office, for example, projects the U.S. government debt ratio to reach a new historic high next year, above the World War II peak. Corporate debt is also rising briskly to reward levels as firms draw down revolving credit lines to self fund cash flow shortfalls. At this pace, it is not inconceivable that the economy wide debt ratio may increase by 50% of GDP over the next year and a half. There goes that 18-month window. Money printing is a hard habit to kick. Central banks are on the hook to help fund this debt increase. Since the end of February, the Fed's balance sheet has already grown by 60% and is on track to more than double by the end of the year. Even two QE novice central banks have unleashed their printing presses. The Bank of Canada has already tripled its balance sheet, and the Reserve Bank of Australia has allowed its balance sheet to increase by 43%. The counterpart of this rapid central bank balance sheet expansion has been a sharp increase in monetary aggregates. In the last weekly release of the Fed's money stock data, M2 rose 18.5% over a year ago, an unprecedented pace of growth in the history of the weekly time series starting from 1981. It is likely that the annual growth in M2 will continue to increase to somewhere between 20 and 40% by year end. We got these estimates on M2 from a few of the dinosaurs who still work on Wall Street. Rarely have we ever seen so many economists dismissive of an economic metric than we asked about their notion on this record M2 growth in its meeting. The last time M2 grew at such a high pace was during World War II, when annual M2 growth peaked at almost 27%. But monetary expanse alone isn't sufficient to generate inflation. The context is very important too. Take Japan, the poster child of debt deflation. Arguably, this is a case where monetary financing of the deficit has been ineffective. But Japan was already in a prolonged deflationary spiral that had unanchored inflation expectations when this policy was unleashed in full. In any event, since 1999, their M2 never grew by more than 5% a year. A hobbled banking system focused on healing from a prolonged banking crisis has probably a lot to do with this. In the US, it can also be argued that a large deficit combined with massive money printing were ineffectual at stoking inflation in the aftermath of the global financial crisis. Again, context matters. And the post pandemic recovery may be different from the GFC aftermath. First, an austerity movement similar to the one that swept the Tea Party to prominence in the 2010 US midterm elections is very unlikely to emerge. The opposite forces are at play today as growing income inequality breeds populism. Second, the bank centric GFC induced a one time paradigm shift in banks, preference for liquidity, later enforced through regulatory changes. As a result, only a small share of the Fed's massive injection of high powered money was relent in the banking system. M2 never grew by more than 10% a year, even after subsequent rounds of large scale asset purchases by the Fed. Effectively, banks' preference for liquidity and the need to rebuild their capital cushions quash the money multiplier. While the multiplier has recently started to fall, in a crisis, banks are wary to lend to potential insolvent borrowers and, in fact, start building provisions for loan losses. This time, banks entered the crisis in a stronger footing, and policy is more squarely aimed at putting liquidity directly in the hands of businesses and households, shielding to some extent banks from losses. As such, the chance of a large fall in the multiplier as seen in the aftermath of the GFC is now smaller. Plus, the Fed's elimination of the reserve requirement means that the theoretical money multiplier is now infinite. The multiplier is the inverse of the reserve requirement. So, since they took that away, there you go. Milton Friedman famously stated that inflation is always and everywhere a monetary phenomenon that arises from a more rapid expanse in the quantity of money than in the total output. And while the relationship between inflation and M2 growth in excess of real output growth has not been stable over short horizons, it seems to hold over longer horizons. There are only a few times in history when M2 growth exceeded real output growth over a 5 year span by the same or a faster pace than is currently the case the inflationary periods of the 1970s and 80s and the late 1940s. But remember, it is irresponsible to expect inflation to first fall in the coming months, given the large contraction in demand relative to supply. The issue is whether a large monetary overhanging in the recovery phase will eventually stoke consumer price inflation. To answer this question, we need to ask, how reasonable is it to expect that in the recovery phase, the Fed will be able to deliver an increase in interest rates of a magnitude sufficient to suck back the money it so easily printed during the downswing? The current Fed leadership has made it a centerpiece of its new monetary policy framework to do whatever it takes to overshoot the inflation target. Why would you want to do that? This is a risky strategy. If the Phillips curve is truly flat, it requires a large increase in interest rates to bring inflation under control. But a more levered economy is also one that does not digest interest rates well. So when the time for liftoff finally occurs, any hiking cycle is likely to be delayed and unambitious. Furthermore, the risk of a complicit, politically appointed central bank chairman cannot be easily dismissed, given that central bank independence is no longer a sacred cow. That's right, they're getting closer and closer to not having that autonomy that they're so used to having. High debt accommodated by money printing is difficult to banish. Sort of like when a government makes a new law, it's really hard to reel that thing back in again. It really is. Inflation expectations could one day respond to this reality. It is the risk of fiscal dominance that makes the current GMI potentially inflationary during the next cycle upswing. After all, fiscal dominance was a key reason for inflation to flare up in the late 1930s and the 1940s when the Fed was strong armed to keep rates low and to monetize Treasury debt issuance well beyond the economic recovery phase. There are other reinforcing considerations to fear a resurgence of inflation down the line. The pandemic has exposed the vulnerability inherent in a global interdependence and stoked tensions between the US and China. There may come a tripping point when a breakdown in global supply chains spills over to goods prices, undoing 2 decades of deflationary attributable to globalization. Seeking refuge from the great monetary inflation. So, with this type of monetary growth as a backdrop, here is one way to navigate these extraordinary times and policy actions. Below is a list of inflation hedges rank ordered in what we call the inflation race. While some of this list will track inflation in the classic sense, other instruments have been added to pick up assets that will respond best to an acceleration in monetary growth, not just consumer goods and services or price inflation. So it includes a host of assets that at one time or another have worked well in reflationary periods. Gold, a 2,500 year store value. The yield curve, historically a great defense against stagflation or central bank intent on inflating. Let's see. So NASDAQ 100, the events of the last decade have shown that quantitative easing can rapidly leak into equity markets. 4, Bitcoin. There is a lengthy discussion on that one. U.S. cycles. Next, the Aussie yen, long commodity exporter and short commodity importer. Aussie yen, okay. Tips, Treasury inflation protected securities, index to CPI to protect against inflation. GSCI, Goldman Sachs Commodity Index, a basket of 24 commodities that reflects underlying global economic growth. And final, JPM Emerging Market Currency Index. Historically, when global growth is high, the inflationary pressures are building. Emerging market currencies have done quite well. So those are the 9 that he listed there. And then there's a little chart and stuff like that. So basically, you get the point of where we're going with this. It ain't looking so pretty, is what it boils down to. And they know it. And I think this is showing that there's very little, if anything, they can do about it. I just put the link in the live chat for anyone who wants to check that out. I thought that was a pretty good article. So I wanted to address that. So basically, folks, it all comes back around. Everything comes back around. Where's your trading account? Have you opened one? Have you not seen what is in front of our face? What in the world are you going to do about it? Now the markets have turned up. Turn up, turn up. So now the thing is, are we in a cycle of a bottoming process for whatever reason? And are they going to now drive it up? Is that what they're looking to do? Drive the markets up? I wouldn't put it past them. We getting mighty close, but we ain't there yet. But we are getting mighty close, ladies and gentlemen. We getting mighty close. Okay, so far, it looks like the NASDAQ 100 has tripped. So it has just totally reversed itself. It did have a crash alert for today, which it did trigger, and then now it is 100% reversed itself. So that's an interesting one to watch. And it's by itself, though. Nothing else is doing that yet. Nothing else is nowhere near doing that yet. So we'll see. Is it just the NASDAQ being volatile or what? Or do we have action? So this is getting interesting. And right now, we just don't have that question answered. All I can say is there's so much going on right now, you guys, that we do need to be mindful of what's going on. And the only way that I can say that you can help yourself, and I keep saying this, you got to take you got to beat the bank. You got to. There's no choice. There's no choice. You have to, because right now it's one of those situations where they know that everything's out of control. They know they can't do anything about it, and the only thing they're going to keep doing is print money. They're going to keep doing it because that's all they can do, and because whether they want to admit it or not, people are waking up to it, so they don't care. And now we have unintended consequences. People are afraid to go back to work and refusing to really to go back to work. They'd rather get that unemployment check, because for some people they're making more money in the unemployment than they are when they were employed. So no one's going to be just quick to give that up. You know what I'm saying? So just something to think about, you guys, just where we are and where we could be headed. It ain't looking good, but they did kind of tip their hand. We know now that institutions have been and are continuing to be involved in the crypto space. So with that being said, folks, handle your business. All right, that's all I got for today. Keep it nice and simple, short and sweet. Remember, PulseWaveTrading.com. You can come and register for our weekly webinars and receive some free goodies and handouts. You can also pick up a 6-pack while you're there. You know you're thirsty. You know you're parched. You can get started trading with us, break bread with us, and build up your monetary reserves. The best way to rob a bank is not to own one. No, no, no. The best way to rob a bank legally is to beat them at their own game. They don't want you in the market, so you should be in the markets even stronger. That's all I'm saying. All right, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I'll see you guys this evening for the end of day report. The rest of you, I'll see you in the trading room. Peace.